Hello, Professor Krishnan. Now we are presenting Globalization of Hyatt Place. There are 3 people in our group, Xie Ying, Xu Shujie, and Yang Li. First, let's go through the history of Hyatt. On September 27th of 1957, the Hyatt Corporation came into being upon purchase of the Hyatt House at Los Angeles International Airport. In 1969, Hyatt opened its first hotel outside the United States, which is called Hyatt Regency Hong Kong. In 1980, the Grand Hyatt and Park Hyatt brands were introduced. Hyatt runs resort hotels, starting with the Hyatt Regency Maui also in 1980. In November of 2009, Hyatt completed an initial public offering and began trading publicly on New York Stock Exchange under the symbol H.
So the first question is, what were Hyatt's motives in expanding its brand portfolio? First is to stay relevant. Hyatt should follow new trends to attract customers in technology-oriented fields. The second motive is reaching new clients. By expanding its brand portfolio to tailor their product to different target customers instead of only offering high-end products, it can help occupy certain emerging markets such as Brazil, China, and India. And the third one is about increasing loyalty. Expanding brand portfolio enabled Hyatt to create new brand extensions which will benefit its brand and owners and customers of the existing hotel as well as the owners, franchisees, and customers of new brands. Additionally, risk spreading is also a motive. Expanding its brand portfolio promotes Hyatt to disentangling the holdings and waiving the multiple strands of the hospitality business, as well as overseeing the subsequent growth into a multi-brand lodging firm. What's more, by expanding brand portfolio, HCC can gain more attention and stand out from the competition, as well as increasing earning potential. And as for the second question, motives in choosing international strategy for its lower category brand, we simply list 3 motives. The first one is to get profit advantage in the global market, because domestic market limits its development. And the second one is to get growth opportunity, because growth potential in its lower category Hyatt brand is significant both in the US and internationally. Hyatt should analyze opportunities for expanding the new brand in strategic markets around the world, not only in the US. This advantage benefits Hyatt from increasing sales and market shares. And the third one is to be more competitive. The stress from other competitors such as Wingate Inn, Hilton Garden Inn, and Courtyard by Marriott urges Hyatt to go globalize.
Question 3 is about the modes of entry and explain why. First, Hyatt can grow its select service presence through the construction of new franchise properties, because by increasing their focus on franchising, Hyatt will gain access to capital, and the franchising agreement involves lower levels of resources, commitment, and levels of control are less. To pursue this strategy, Hyatt has established an internal team dedicated to supporting franchise owners and to driving the expansion of franchise hotel presence. What's more, Hyatt plans to expand existing relationships and develop new relationships between franchisees. And second, Hyatt might use joint ventures mode. It strengthens the company's presence in markets. As well, joint ventures might have benefits in terms of higher returns for the company than franchising, like what Hilton did. Their strategy is that they do not invest in property. They choose owners of buildings to continue working with them. They invest only in humans and are looking for partners that invest in the buildings so that they can lower the cost and risk. And last, direct investment may be used in acquisition. Taking the acquisition of Amerisuisse, for example, Hyatt Corporation can take advantages of Amerisuisse, which continue to undergo renovation and repositioning. Direct ownership provides a high degree of control in the operations and the ability to better know the consumers and competitive environment. However, it requires a high level of resources and high degree of commitment.
As for the first question, we combine how top management pursue international opportunities and available options together. So we list 4 main options, and the first is to increase the number of hotels under the Hyatt brand affiliation by entering into new management and franchising agreements. Specifically speaking, Hyatt can go globalized by expanding its presence through the development of new hotels and conversion of the existing hotels. And the second is to increase focus on franchising, which includes establishing an internal team dedicated to supporting franchise owners and to driving the expansion of franchise hotel presence, as well as expanding existing relationships and develop new relationships with franchisees who demonstrate an ability to provide excellent customer service. And the second is to Hyatt could acquire other brands or hospitality management or franchising companies, which means acquisitions. Specifically is because acquisitions can complement the ability to serve existing customer base and enhance customer preference by providing a greater selection of locations, properties, and services. And another reason is that existing or prospective owners of managed or franchised properties could strengthen Hyatt's brand presence. The third reason is greenfield startups and joint ventures. Hyatt could, because joint ventures have higher returns than franchisees, so Hyatt could choose these 2 measures to go globalized. And the fourth reason is to provide a select offering of services at a lower price point than full service hotels in emerging markets, such as Brazil, China, and etc. In terms of a recommendation, we would recommend that Hyatt Corporation to focus on enhancing its brand preference by continuously improving the performance of its existing hotels and expanding the presence of its brands in selected markets worldwide. And Hyatt is suggested to keep innovative, efficiently designed, and operationally excellent to ensure the success, and think about new marketing strategies. And that's all. It's all about our presentation.